Good afternoon. This is Ken Long from Tortoise Capital with a review of the daily debriefing from the Tortoise chat room from January 23, 2014. Got an assortment of trades to look at. The first thing I want to do is take a look at the setup that we framed from yesterday's debriefing. We looked at just the top number one on the auto framer, which was Cliffs Natural Resources, which came in at a reward to risk ratio on a swing basis of 6.03 to 1. And we set up this trade frame on daily charts. This was the 21st close. We said if price went through 2150, we'd want to go long with the stop at 21. And our targets would be 2275, the Bollinger Band mean at 24, 2550 for the far side of the river, 2675 for the far side floodplain. We also looked at these purple lines as potential price targets too, based on support and resistance lines. So we had a variety of targets. We said if we got a price moving through 2275, we would add a position there because we'd have 2R in hand with momentum. And then we also said because this is a max pain range compression, see how far it's fallen from the 10-day high and compressed into tight range, that we'd be willing to go short south of 21 simply because the primary trend is down, and that would be reinforcing the existing conditions. So we have CLF, Cliffs Natural Resources, in a critical state in which we can frame a favorable reward to risk ratio in either direction with clear signals and using our RLCO framework to mark off our decision points. Well, what ended up happening was there was a minor gap down and then a sell-off. Because that was below 21, it was reinforcing the previous trend. That was an instant short for us, and so we get the entry short at 20.58 with a 20-cent stop, puts it well above the high of the day, and this is on 1-minute charts here. The price moves directly in our favor, like 40 cents, so that's a 2R in hand down here. We're hoping to get more out of this, so we move our stop down. As the looks like it's getting ready to fail some more, we start inching our stop down even further. However, we end up getting a move against us. We get our exit at 2040. So on the move from 2058 to 2040 with a 20-cent stop, in other words, from here to here, we make 0.9R. Could have done better, maybe should have done better. This was moving pretty fast though, and we were looking for more. What we had then was a stop and reverse, essentially, a couple minutes later, because we were still on ones, and we see an RLCO happen outside the river. We like this support level. It was in here on ones, so we go ahead and enter at 2049, going long, now with a 0.2 initial stop. And that move takes us up to 2078, started to stall. Now the rest of the market was failing at this point, and we didn't want to stick around any longer on this one because it had already moved past the Bollinger Band main. We're starting to get sideways. We had 1.5R in hand, so we decided to take that bird while we could, and so we get our exit at 20.78 for 1.5R, and so that nets out at about 2.4R for the first two trades of the day, and that feeds the bulldog, and that makes us happy. Later, we decided to shift to a swing time frame, and now this is, we're looking at 2 hours and about 30 days. This is a Z-swing trade now, also in CLF. You can see not only was it horrible on a 10-day basis, but really over the last 30 days, it's fallen from 27 down to 20. But what we had was a spike outside of the floodplain on the 2 hours, followed with a higher low and a higher high. And this second 2-hour candle, so this is at about 10:30 or 11, we decided to make the trade at 20.65 with a 0.5 initial stop. This is what that trade looks like when you shift back to a 3-minute chart. This was the little hook up, 2065 with a 50-cent stop is down here at this red line. The rest of the market continues to fail. This thing started failing sharply. We get the RLCO outside of the river, hold on to it till the bottom of this river. We decide, and it is still failing hard. And so we think there's a good chance it'll fail below this support level. So we go ahead and take our loss here, our professional loss at a 2048 minus 0.3 R. We stop and reverse, so now we're short at 2048 with a 20-cent stop now because we're playing this one tactically rather than as a swing. We put that just above the dragon, which is at the top of the river. That's a 20-cent stop. We get a sharp move in our favor, comes outside of the floodplain, starts to reverse. We exit here after 6 minutes adverse move. Cover at 2030 gives us 0.9 R. Because of span of control issues, I was on Vicodin today because of some oral surgery I had. I was working the volatility trade at the same time. I just didn't have the mental energy today to trade any further in CLF, and so missed this move. And that's really just a span of control issue. But you can see how that might have been re-entered here upon failure to get back into the river, and there might have been some more work to be done. Here's the next 4 or 5 trades are from traders in the chat room who are working their way through all the material and learning how to do this stuff, and I want to share some great work that they've done today. This one was a failure out of a sideways quiet channel in Boeing, and this is 5-minute charts. He plays the short here when it fails out of the sideways quiet channel, and he covers over here. There may have been more, but that's not a bad play. And cashes 0.9 R here for about 20 minutes of work. Same trader makes a really nice play here in Jazz with a breakout from sideways quiet channel, and is able to cover later for let's see, it's about a $3 move on a dollar stop, so just a little over 2, maybe 2.5 R. Really well done. This is from the magnificent Heather. She was working Sina on 3-minute charts. Here's her breakout from the river. She's using a modification here where she's got the yellow portion in the middle where she bought the breakout at the 0.5 plus or minus. So this is the actual river in blue. This is kind of a subset of the river, and she's trying to front run that just a little bit. Very sound and elegant idea. So she gets an entry around 73.25, maybe a 25-cent stop, call that, and then 2-hour trade up here to 73.71. And then in Tesla, she gets the breakout from the river this time at about 176.80, with about maybe call it a dollar stop below the Bollinger Band mean, and exits about 20 minutes later at 178.57 for another couple R. Very well done, elegant move, and notice the range expansion and then collapsing into a consolidation zone, so the run is over. Nice exit. Here's a trade frame I put on. This was in XIV, so this is a sideways quiet channel, which I see developing in here. It officially becomes sideways quiet channel right about in here, where the both regression lines get into the river, and you can see the Bollinger Band mean is sideways. The channel has pinched. The Bollinger Bands have pinched. Price and both the regression lines are inside the river, all nice and tight inside here. This had sold off one fail stat and looked to me like, as you can see, the 30 regression line is pointing up, the 10 is pointing up. It looked to me like the next indication was up with a bull quiet market, so I want to go ahead and buy this one at 35.50. I'm using a 40-cent stop on this one for money management purposes and for computing our multiples. So that would put the stop down here at 35.10. But I've made a decision that should read 35.30. At this red line, or at half an R, if it falls out of the floodplain, I've decided I'm going to make a stop and reverse here, and then if it gets past 35.10 with momentum, I'm going to add a second position. On this one, if the breakout works in my favor, I'm going to add a second position at probably 35.90 with the idea that it is going to go up. It will have cleared the morning gap, and then we'll go up, or this congestion here at the open will close the gap up here to 36.50. So that's where I want to add a second position. So I've got a almost a straddle, if you will. As this unfolds, it sells off right after I buy it. There's the it falls out of the floodplain at 35.32. So I cash my according to my plan. I take my loss here at 35.30 for minus 0.5 R. Now we've got a clear directional move, and the rest of the market is failing. I'm short here at 35.30. I'm using a 10-cent stop on this one, 35, and that would put me in the middle of the dragon. It moves south sharply. Shortly after, like 2 minutes later, it gets to 35.10 and starts to hesitate, and the rest of the market had started the reverse to go up. So I decided to cash that one for 2R, so that lets me net 1.5 on that trade sequence in XIV. Later that day, I'm still working XIV. My span of control is 1. We get another almost a sideways quiet channel here. When it violates this price level on this spike, I get short again, now with a 20-cent stop. So we're short at 34.98 with a 20-cent stop. Ride this down. It breaks out of the floodplain. There's our 1, 2, 3 reversal pattern. So we'll go ahead and take the exit here at 34.75 for 1R. Shortly thereafter, when price re-enters the dragon, get the entry to go long at 34.74, moves up sharply in our direction. I cover shortly thereafter, about 35.04 for 1.5R. I was out of willpower by that time. The medication was too good. So there were 2 more legs of this magnitude that continued on. I just didn't have the will to keep trading. I have to have 4 things to trade: time, money, a pattern, and the will to execute properly. And I had the first 3, but not the 4th. We're going to shift out a little bit. We've been stalking some swing trades. This is one in corn ETF, Tecrium corn. This is the daily candlestick. You can see that it's had a horrible sell-off, but then this elephant bar on large volume, thinking maybe that's a bottoming tail, an orderly pullback that has started to reverse back up. On a weekly basis, you can see this has moved from 54 down to 32, and with some evidence that the sell-off is stabilizing. So we start playing this as a tactical trade. Now I've zoomed in to begin my swing trade. I'm going to use a core and a turbo entry. So I'm going to take one position here at in my core. I like this at 30.80, and on the core position, I'm going to use a 1.3 stop, which would take it below this swing low. At the same time, I'm going to add a second position as a turbo entry, also at 30.80. Same time, I like this one because we've got a low, an impulse move up, a pullback, finding support, and starting to break out again. So I like the higher lows. You can see the dragon has turned. The river is starting to turn up. So I like this on a turbo basis. It's at 30.80. We're back to 2-hour charts now. On turbo positions, I've got to close them out during the day, and I will typically take profits in hand, especially on a tough day when I can. So this one gave us 0.5 on the 0.5R on the turbo position. The core position is still open. It sold off. It's still holding at 30.65 above the dragon. The trend for the day was still up, and so we like this on the core. and we'll see how that goes. And we've got 0.5R in hand. And now for the last trade of the day, this is really a trade frame. What we're looking at here is another max pain range compression. I decided to go with the second trade frame. The original frame in Cliff is still valid, that if we get a lower low, it's still going to be painful and will be a good short. And it tests out still at 5-1. Maybe a little difficult to see in that. Pull this down for you. Yeah, so Cliff is still at 5-1. Nike now we're on 2-hour charts. This is the 2 hours, 4 2-hour bars from today. I like this one as a sort of like a Z swing trade. Spiked outside of the floodplain and then had 2 higher lows and 2 higher highs and closed very strongly. So that gives us one good day of potential turnaround. So tomorrow, what we'd like to see is an orderly entry inside today's range, and then if it breaks above 73, then, or as we can see over here, the mechanical entry would be 73.23. I'd be willing to take this at the edge of the dragon though. So an entry around 73-ish, and our price, our initial stop down here at 72. It's about $1 initial risk, and then profit targets looking at 74 because of congestion. Bollinger Band mean at 74.25. Far side of the river a little above 75. Another congestion area here, and we're the top of this part of the dragon at 75.25. Oh, you can't see that because there we go. Let's try that again. So the entry right here at about 73. Price targets at edge of the river, Bollinger Band mean, far side of the river, far side of the floodplain, and some other support and resistance lines. At 76, 75, 75.25, 74 even. And then, just like we showed on Cliff, max pain range compressions, if they fail, then those become auto shorts. So anything below 72, then obviously this long downward trend is going to continue. So again, critical state trade here, where we have a favorable reward to risk ratio in either direction. And that's the daily debriefing for the Tortoise chat room for January 23rd, 2014. Keep your risk measured and your powder dry.